Hi, Tom. Good to see you. As you know, April is Financial Literacy Month, and this is a topic that is very important to you. And so, one thing that we want to cover today is the difference between a traditional and a Roth IRA. And we're doing this because I know that you prioritize tax diversification for your clients too. So, there are so many options when it comes to retirement accounts, but just break down the difference, please, right now that between and the Roth IRA.
Sure. Very simply, it's how your contribution is taxed or not taxed, right? So a traditional IRA is the money that you're making as a contribution into that plan is pre-tax money. So you haven't paid tax on it yet. As it grows, it compounds. But then when you take distributions later on in retirement, then you're taxed on the whole thing. Roth is the opposite. You're paying tax on your contribution today. It's going to grow compounding, but then when you take the money out in retirement, then you'll get everything out tax-free.
Okay. Well, I understand when you explain it like that, but I got to say, it doesn't sound like a lot of fun to pay taxes right now. Why would I want to pay my taxes now?
For most people, it doesn't sound good, but let's think about your question, and I'll answer your question with a question. Do you think that there's a possibility that taxes will be higher in the future?
Since we are now in a historically low tax rate, and because we were talking, the US debt now surpassing 30 trillion for the first time ever, I'm thinking taxes might go up.
Yeah, 2 points to that. One is that just this year, the federal government is spending $5 trillion more than it's taking in tax revenues. Second thing is to go along with that debt clock, which I use all the time with clients, by the way. The Congressional Budget Office has predicted that in the next 5 years, personal income tax confiscation is going to go up by 30%. That means that they're predicting that in the next 5 years, they're going to be collecting 30% more in personal income tax than they are today. So we're already being told by the federal government, whether people want to listen to that or not, we're being told by the federal government that your taxes are going up.
Right. Okay.
So if we know taxes are going to be going up, right? As you mentioned, we're in a low tax environment, discounted tax environment. So wouldn't it make more sense to pay tax on your seed today and get your harvest for free rather than the traditional way, which is don't pay anything on your seed today and then pay tax on your whole harvest in the future?
Right. So I'm glad you brought this up because, again, this is all under the umbrella of Financial Literacy Month. And I feel like a lot of people are very familiar with your 401k. So how is this different from my 401k?
Well, it's a little bit different because not every 401k offers a Roth component. Some do today, right? So most people aren't, most people are using the 401k as their retirement vehicle. So that's where their contributions are going. And most of the time, almost all the time, it's going in pre-tax. And then if you're lucky enough to get a company match, that's going in pre-tax too. And so you're not taking advantage of the discounted tax environment that we're in. Now, a 401k is allowed to have a Roth component to it where your personal contributions going in can go in after tax and then grow tax compounded, right? And then you get those out tax free. Now, the big rub to that is that anything that the employer puts in on your behalf has to stay in the traditional side, all right? But your contributions going forward, if your 401k plan allows it, can go in a Roth component. Now, if you don't know if you have that ability or if your plan doesn't have that, then talk to your employer, ask them to add that. It's a very simple fix to a 401k, but not every plan allows you to have it. And if your plan won't allow you to have it, then you probably should move your plan to a different company.
Right. Yeah, these are all really important points. And I got to say, it was because of you that I did open my 401k Roth as well at work. So thanks, Tom. At least I'm listening to you, right?
At least somebody is.
So though, if somebody else is listening and they would like your help with all this, Tom, what's the best way to reach you?
Call me, 973-394-0623. Email me, tjoconnell@internationalfinancial.com. I'm happy to answer your questions, help you find you a custodian for your 401k or talk to you about whether or not a Roth is a good idea for your situation or not.
Right, right. Perfect. All right, Tom, thank you.
Thanks, Erin.